and click record. We'll go ahead and begin recording now. Okay, so we are. All right, let's get started with the presentation. And just confirm you all can see my screen. It says with the next slide, who is the Hight Effect? We can. Everybody, can somebody just confirm you can still see it?
Yep, I can see it. What is the Hight Effect?
Oh, okay, gotcha. And sorry about that because I'm switching. I have three monitors set up, so that's why I'm asking. I wasn't sure. But so who is the Hight Effect? First of all, I always start with our foundation, and our foundation at the Hight Effect is based off two principles. And those principles are education and enterprise. Essentially what that means is that we want to provide education to entrepreneurs and small business owners and then help them develop and build their enterprises, whether that's through our consulting or whether that's through the resources and various companies that we work with. That's what we aim to do is, again, focus on education, educating entrepreneurs and small business owners, and then helping them build their enterprises. So the other part of our pitch is that we're a consulting firm that focuses on small businesses and entrepreneurs. That's specifically the segment of business that we work in. We don't go out to larger businesses. And just to clarify, a lot of people think when you say small business, you're talking about a company, that's like 2 or 3 people, only making, $100,000 in a year. Well, based off of the government standards, a lot of small businesses, depending on the industry, revenues can range up to $20 million. So when you say small business, I believe over 95% of businesses in the United States are small businesses. So even though there are a lot of corporations, you have the big companies of the world, the Walmarts and, the Targets and Amazons and all that, those are bigger businesses, but they represent a very, very small portion of the businesses in the United States. Again, we provide educational events, lectures, and courses made specifically for entrepreneurs. This is the first course that we're doing of this nature, and this is the Financial Basics for Small Businesses. A little later, I'll talk about some of the courses that we're going to offering that we just launched in terms of enrollment today. So we'll have a few interest meetings a little bit later over the next 2 months about the courses that we offer, but those will be more in-depth courses, and I'll kind of get into that later on. From working with the Hight Effect, our clients become a part of a vast network of small business resources. And when we say a vast network, we're not just talking about, going to networking events and just, talking to people. We're talking about true, genuine relationships. And those relationships range from attorneys, so small business and entrepreneur-focused attorneys, accountants and CPAs, financial resources, so business funding resources, investors, business and professional financial planners. So we have all the resources there if you're trying to raise money, and then marketing, PR experts, specializing in digital and traditional marketing, websites, graphics, and more. So the purpose of this presentation is fairly simple. Number one, we want to provide you, listeners, and the entrepreneurs that have joined us today with insight into the best practices for small business financial management. The second thing we want to do is give you actionable information that can be applied for your business. So the entire intent is that by the time you leave this or log out of this webinar, you'll be able to take actionable steps that actually impact your business in a positive way. And that's the thing also that we emphasize with our courses is that we want you to be able to take the information you learned from our course and then apply it to your business that next day. So no meeting is, of course, complete without an agenda. So we'll go ahead and just go through the agenda really quickly. First, we'll go over an overview and the importance of bookkeeping. Then we'll go through the do's and don'ts of bookkeeping. Third, we'll go through resources to help you maintain books and accurate finances. Then we'll go through some of the tax implications associated with bookkeeping. And then lastly, we'll go through the long-term benefits of good financial management. So for overview and importance of bookkeeping. The first thing you'll need to know before we go into this is, okay, what is bookkeeping? So it's essentially the collecting, storing, and receiving of financial transactions. It's very, very vital to properly managing your business resources, and you need to have these records for tax purposes. A lot of this, even though we're not going in depth into tax information in this presentation, there are tremendous tax implications without, that you'll have if you don't manage your books properly. So again, you have to understand that bookkeeping is the collecting, storing, and retrieving of all the financial transactions, be it an expense or income of your business. And what's it used for? So bookkeeping allows businesses to organize their financials and to record transactions such as loans, purchasing equipment for the office, buying merchandise on credit, customer payments, or generate financial reports. And there are a few other things we'll talk about that's used for later. And why is it important? Well, first, you want to be able to keep your transactions organized. You'll need to know the difference between your income and your expenses. And then additionally, you'll need to know the categories and how to categorize your financial transactions within your ledger. The second part is to predict the company's success. So as you plan for strategic moves, you'll need to understand bookkeeping. When you fulfill your tax obligations, you'll need to understand bookkeeping. And then lastly, for the better management and financial analysis of your business, to even make any of these decisions from a tax perspective or a strategic move perspective, you'll need to understand the importance of bookkeeping. So now we'll go over some of the do's and don'ts of bookkeeping. Some of these may seem simple, but we've worked with so many companies. There's a ton of companies that don't understand, again, that these simple things that are oftentimes overlooked can be extremely problematic long term. First, do have an understanding of bookkeeping. So we're not saying that you need to become an accountant, but you do need to have some type of working knowledge as a business owner of the bookkeeping process, of bookkeeping, what different things mean, and some of the terminology. Next, do accurately record all business transactions. The IRS is watching, and I believe that on an average of every 3 years, a small business is going to get audited. So you have to make sure that you're accurately recording all of your business transactions. Again, the second part of that is your books may be completely out of whack if you're not actually you're accurately recording your transactions, and you may not be accounting for money that you have or money accounts receivable that should be coming in, or different inventory. So you really have to understand, again, to record the accuracy of your transactions. Do engage with an auditor or accountant often. We recommend on a monthly basis, and even when we're doing the financial projections for people who haven't started businesses yet, we always input on a quarterly basis for them. But we put, have a quarterly review, whether that's a sit-down review with your accountant of your finances. But again, you should still be talking to your accountant on a more frequent basis to ensure, that you're in a good financial position. So again, all of the resources out there, you don't have to go out and, become an accountant or get a master's in accounting or what have you. But again, make sure that you're engaging with the accountant and you're understanding what's going on, because you also don't want to end up in a situation where an accountant is taking advantage of you because they know that you don't know or have the depth of knowledge that they have. Next, do weekly bookkeeping and reconcile your bank monthly. What this is just saying, ensure that you are doing weekly bookkeeping and keeping up with your books on a regular basis and a consistent basis, and then that you're so entering any transactions that you have. If you're using a manual like a Excel document, make sure you're entering those transactions consistently and recording them properly with dates, etc. And then reconcile that with your bank monthly. There may be charges that you're not taking account for depending on the type of bank that you have, and those charges may be affecting your books. You may not be aware of them. So now let's talk about the don'ts. 1, don't mix your personal and business accounts. This is a big red flag, especially when you get to speaking with investors, be it angel investors or venture capitalist firms, etc. What they'll want to know, and banks as well, they'll want to know that you're keeping your books separate and that you as a business owner are acting properly and ethically, and not mixing the two. There can also be serious tax implications from mixing your personal and your business accounts. Next, don't throw away the original source documents, so receipts, to validate your income and your expenses. Always keep receipts, and then if you're in certain transactions where you need a 1099 form, if you're acting like as an independent contractor and people are invoicing you, keep those invoices and keep those receipts, because at some point it may come back and you may need it. Next, don't fail to manage security risk. So this is from a security perspective in terms of different things to look out to. You have to be able to you have to be able to maintain and manage the different security risks that could come up from your bookkeeping, and that's from even like any fraudulent type things from accountants, anything that could be a potential risk to you and your finances. You know, if you're keeping the money in a jar versus keeping it in a bank account, you know, there are different implications there and things that could be detrimental to your business. And then lastly, just don't neglect the double entry accounting. Sorry, I'm looking at people are texting to get into the thing. Okay, next is resources to help maintain your books and accurate financials. As far as the resources, we'll start at the very top up here with the bookkeeping software. That's these at the top. I'll change the pointer here in just a second. But the first one is Wave, so W-A-V-E. This is a free accounting tool. And this is the one that we use and recommend to clients. It also interfaces with PayPal, so you're able to use that if necessary. And it can bring all the books in, bring all of your transactions in for you. The second one is Intuit QuickBooks. So most people hear about QuickBooks. It's a little complex if you're not really 100% familiar, you know, from a financial perspective. But now QuickBooks also has, you know, multiple promotions going on. So, you know, from $10 a month from a simple package, you know, a $5 a month self-employed package up to like a $30 a month, and then depending on the size of your business, even a more expensive one for QuickBooks. But the good thing about Wave, I didn't mention it, it's 100% free. They do have additional service charges such as credit card processing and bank payment processing, tax service states and self-service states taxes. But other than that, it's pretty simple. And then when you need to upgrade to a paid, more robust version of Wave, you can also do that. The next resource is a point of service system. So they're also known as POS systems. And these systems are what you use to take payments. So the first one is PayPal. I know a lot of businesses that are like, okay, you know, we're a more legitimate business. We'd rather have, you know, some other type of point of service. You know, it's not a PayPal because PayPal is like it's free and it's online. People just sign up for it. But the reality is we're in a different age and a different time, and having the ability to take payments at any point in time in any method is crucial to your business. So that's why we recommend PayPal. And PayPal is also free. And the fees that PayPal has are not necessarily that big. They are sometimes substantial depending on the amount of the transaction. But again, relative to banks, it's oftentimes less. Next is the Square. This is the Square card reader that you may have seen when the iPhones first started, when the Square app started coming out, people started taking more transactions via their phone. With the Square app, it's a square that looks just like this little black box here, but it's white. You can plug it into your phone and you can swipe credit cards that way. That is also free. You can actually go to Square's website, and what it'll do, they'll mail you a free one, and you can hook up the Square processor software to your PayPal or your bank, and that way the payments will go directly to your bank that way. These are, again, the point of service systems. So these are the systems at the point that you're taking transactions. And then lastly, I just wanted to add this one in here, kind of last minute, but I thought about it. It's been a good tool for us. But the customer relationship management software is a good resource. The one we like is HubSpot, because this one is also free, and it only has certain capabilities, you know, when you get the free versions. But it's web-based. They also have an app. And in addition to you being able to manage all of your clients in one place, you're able to put sales information and expense information in here. It also will help you track things like the lifetime value of your customer, and just different metrics that are necessary, financial metrics that are necessary for your actual customers, and for you managing your relationships properly there. So if you want to put certain promotions in for a certain customer, or document this customer got a certain discount at this particular time, you can enter it into HubSpot, and then all that information could interface into whatever your main bookkeeping software is. So these were the resources to help maintain your books and accurate finances. So next we'll go into the tax implications associated with bookkeeping. The first thing is to hire the right accountant. So you really have to understand the importance of an accountant and of the individuals that are involved in your business. Your accountant should do more than just prepare your financial statements as well, and do your taxes. They should also be, sort of an advisor and be able to tell you, this is where you are, this is where you're trying to be, and be able to, help you throughout the year, track your income and your spending to make sure that you don't have cash flow problems. The big thing, with small businesses is cash flow. So you want to ensure that, you're understanding and knowing where your money's going, how much money you're actually that's actually coming in. Another thing a good accountant is able to do is to help you monitor your gross, net profits. Next, claim all income that is reported to the IRS. So any information that you report to the IRS has to be claimed. And then the IRS, again, a lot of companies get in trouble with this, and we do have accountants that help you if you do have tax problems. They work specifically with small business owners and small businesses that have tax issues. But make sure that the income you report to the IRS matches the amount of income that's reported on any 1099s you receive. And those 1099s are the miscellaneous forms you receive, from various transactions, from businesses. So again, the tax implications the tax implications associated with bookkeeping for this point is, claim all the income that's reported to the IRS. They are watching, and they are able to see if your incomes and your numbers are off or not coming up accurately. Next is to keep adequate records. So keeping thorough and accurate records throughout the year will help you ensure that your tax return is correct and you don't get audited, or you don't get a nasty letter from the IRS coming back saying, okay, you owe X amount, way more than what you thought you owed, because it could put you in a very, very bad predicament. And then, leaving anything on the table, any deductions on the table, or worse, could put you at risk for an audit. And that's the last thing you want, especially as a small business, because if you have multiple audits, for instance, and then you're trying to go raise $1 million, there's going to be some red flags to the people who potentially invest in your business. Separate your business expenses from your personal expenses. So this is a very, 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 very important one. The IRS, it audits your business. If they find personal expenses mixed in, regardless of whether or not you reported them, they could start looking into your personal accounts because of the commingled money. So always want to make sure that you're separating. You have a separate bank account and a credit card for your business, and you're running it solely as the business, and as well as for your personal expenses, and you're only running it for your personal expenses. Understand the difference between net and gross income. So, if your product costs more money to make than you charge for it, you'll lose money regardless of how many units you sell. So small business owners often forget to take that into account, the difference between their net and their gross income. So we're not going that deep into, the different, net and gross income, but and this is an example I found that was pretty helpful. So for instance, if it costs $100 to make a product and you sell that product for $150, your gross income is $50. Okay, but once you deduct the expenses, your net income might drop an additional $10. So it's important to know that your gross and net profits are different, and that way it allows you to be more profitable. The other part that you have to take into consideration is that so I just got a notification from the meeting alert, so they've extended our meeting time. So it's nice from Zoom. But the other thing is, again, understand your cost of goods sold. So those are the costs that go into the development, the manufacturing of your goods. And that is not a part of your net profit. That's a part of your gross. And it is deducted from the gross. So you have to understand, again, the difference between your net and your gross income and how much money you're actually making off of the actual product or service that you're selling. I clicked out. Let's see. Here we go. Okay. Understand that one. So seek your accountant's advice on your business plan. One of the things we always say is that if you fail to plan, your plan is to fail. We know a lot of companies say they don't need business plans, they don't want business plans, and we'll kind of touch on that, and in terms of the importance of business plans. That's one of the things that we help business owners do is develop business plans. But a good accountant is going to give you advice on how to grow your business, and you should definitely, seek their advice to determine how much to contribute to your retirement fund, whether you should take a bonus or delay it. You know, you may think, okay, you know, the company did good from, you know, a projection perspective. You were 10,000 over. I want to take all 10,000 as a bonus. You can do that as a business owner, but what are the long-term implications of that? And that's something you'll need to talk to your accountant for as they help you forecast your financials. And then again, for the business plan, the accountant should be involved because they need to understand the overall picture of what it is they're accounting for, essentially. And ultimately, with the business plan, that's going to help them determine this is where you're going and where you're taking your business. So by having, again, you know, a good accountant that's involved with your business planning and that you can build a good report with, that'll definitely help you once they give you advice to make the accurate decisions for your business. All right, so now we're going to talk about the long-term benefits of good financial management. So business owners must have a functional understanding of bookkeeping. That's one of the long-term benefits. And sorry, I'm going to have it with key takeaways, so I apologize for that. But the business owners must have a functional understanding of bookkeeping. Next, you'll need to update your company's books regularly and weekly to ensure the validity of the books. Next, be as accurate as possible and record all business-related transactions. All businesses are required to follow proper bookkeeping guidelines, which is the General Accepted Accounting Principles, or GAAP. Your accountant will know you know, about that. IFRS is the other one, but in the United States, this is the accounting principles that our businesses use, or the format that we use. Utilize financial and technological resources from the beginning. So if you look at all those the resources that I showed you earlier with the PayPal and Square and all that, you want to use those from the beginning of your business so that, one, you can familiarize yourself with how they work, and then the second part is so that you'll be able to understand from the beginning, you'll be set up right for long-term success and be able to understand where you are, where you're trying to go. Okay, accurate bookkeeping leads to business success. So again, if you're able to know where you are from a finance perspective, being that finance is such a crucial and important part of a business, it'll help you become successful long term and make the appropriate decisions as a business owner. And then lastly, keep your receipts. That's receipts and any original documentation about transactions. Please make sure you keep them. And I'm sure you can find you know, online where you can you can find online, you know, the different stipulations as to how long you need to keep certain records, but your accountant should be able to know that. And if you keep them electronically, still, I'd recommend, you know, keeping some sort of copy for some period of time, just for continuity purposes, even if you do scan in things separately. Okay, so so this is basically concludes the actual presentation portion of the financial basics for small businesses. If you're interested in learning more, we have the Hight Effect educational series, and we'll send you all this link because we have the email addresses. We'll send your link after this, but you'll be able to go onto our website. It's under the Hight Effect educational series. This is our first course. It's going to start in January of 2019. And over the next several weeks, we'll have a few, what's the next one? Yeah, so over the next several weeks, we'll have a few information sessions. There'll be six virtual information sessions between October 1st, 2018 and January 4th, 2018. This is live. You go to our home site, again, it's the second tab, and you can actually go ahead and sign up. And if you enroll by December 1st, you'll get a discount on those rates. All of our courses will be all in-person courses. And we'll again, in the information session, go over all the pricing for that. There's no charge for the information session. There's no pressure to enroll. We don't like hounding people, and we don't hound people that want to, you know, that attend. We just want to make sure that we provide you with the information. If you see it as a fit, then we say, okay, come join us. The courses won't be taught completely by us. We have a ton of resources in terms of, you know, again, attorneys, all the resources I mentioned to you earlier, digital marketing, advertisers, consultants, and people with various years. Literally, there's a combination of combined years of experience in the areas, or at least well over 100 years. So I mean, we have people coming with 20, 30 years of experience in the area that have already committed and will be teaching some of the various courses. But what we say, and I'm going to go back to this last slide, at the very top here, if you don't have the time or desire for an MBA, but want to gain the same level of knowledge, this is the course you'll want to attend for sure. And just in terms of some of the areas that we'll go over, is that we'll cover accounting, communications, finance, human resources, leadership, legal, management, digital marketing, operations, and technology. And again, this will be an 8-week course. Go back to this slide. The courses last for 3 hours, 1 day a week, for a total of 24 hours of actual in-class training time. It'll be a combination of discussions, interactive learning, and project-based learning. And then again, for more information, you can give us a call or you can email us, contact@thehighteffect.com. Like I said, if you want to just sign up for the information sessions that are coming up, you can click the sign up button and we'll send you more information on that. Our next event, which is going to be in October 2018, is called Legal Basics for Small Businesses. So as you know, this one is called Financial Basics for Small Businesses. Now we're going to the legal pieces. Essentially, what we want to do is kind of give you all a taste of the high level of what we'll be going into in our 12-week courses, or I'm sorry, our 8-week courses. So we just want to, just show you this is at a high level through these presentations and these webinars. This is some of what you'll get, but you'll get a ton more if you come and attend our classes. But the legal basics, obviously, I taught the financial one now, but for the legal courses, I obviously won't do that. We'll have actual attorneys teaching the legal basics for the small business, or speaking on the legal basics for the small business. And again, it's going to be in October, so next month. And the format, we may do webinar depending on the feedback we get from this one, or we may do an actual in-person course or event. Sorry. So now the question and answer. So there's a chat feature in Zoom. So there's 2 ways. You can either communicate via the chat feature in Zoom, or you can just go ahead and just yell out your question if you have one. All right. Let's see. Miko, did we have any questions come in online or through like Facebook?
One is, how do I hire or find the right accountant?
Okay, so that's great. So one of the ways you can hire and find the right accountant is definitely by connecting with the Hight Effect. We have a ton of resources and a ton of businesses that we work with and can connect you with. But first of all, definitely make sure that you're doing your research and then make sure ensure that you're doing your research and you're looking at their website. Okay, but anyway, make sure that you're looking at the company's website and ensure